Hope you guys had a great Tuesday. Let's go ahead and jump into this Wednesday pre-market brief. Going to start off by looking at the crypto markets. We see that they are pushing green, which is a solid sign. We'll take a look at how we did yesterday as far as the portfolio. We had a solid push into the green at the end of the day, but we had some of a pullback in a few sectors within the market. Other than that, the pre-market is looking fairly green as of 5:13 in the morning, but we will see if that may switch right before the open. Let's take a look and see how the averages ended the day yesterday. We had the Dow Jones ended the day break even at plus 0.7%. S&P ended the day at plus 0.10%, breaking even. And the NASDAQ ended the day in green, also at plus 0.14. Let's go ahead and take a look at global markets, see where they're sitting on the day. I believe the Taiwanese and the Korean markets are closed. We have the Japanese ending in the green on the day, which is a good sign for American markets at plus 1.02%. Let's look at the European landscape. We got the stock 6X up plus 0.8%. We have the CAC up plus 0.44% and the DAX up 0.8%. That's a big jump. So we may have a solid push into this morning's market. Other than that, let's take a look at the S&P and see where we sit on the day. If we can get any idea of where we're going. Yesterday, we kind of described that the market is still performing that same trend that it has for the last 2 or 3 years of a pull down. And it looks like we were basically sideways on the daily time frame. So now we may be bouncing between these two lower bounds. The first at 6,775. That's the low that we are bouncing on right now. And then this upper bound at around $6,910. So we'll see if we'll break out of this sideways trend or this overall larger sideways trend in the coming days. So let's look at the 30-minute time frame and see if there's any confirmation or change in trend. And it does not look like there is. It only looks like there's a slight confirmation of this continued slow step to the downside. We have a high right here and a lower high right here. And then we have a low right here and a lower low. Let me grab this real quick. Boom. A lower low right there. So right now we're just confirming the movement of a downtrend. So we'll see if that changes any. Let's take a look at Bitcoin and see where it sits on the day. And we'll go to the daily time frame first. We're still bouncing in a sideways trend right now. So we're still bouncing in that sideways trend. Nothing really changed. It's just a confirmation of that downtrend. The beginning of the year, 3 to 4 months of a downtrend or sideways trend, slight downtrend. Hopefully the crypto market or Bitcoin bottoms here and we prepare for a little bit of consolidation and move into a change in trend in the coming months once they pass that Clarity Act, man. But let's get into a little bit of economic data as far as the market is concerned right now. Yesterday, they released the home builder confidence, which is still low. It decreased again, which is confirmation that the housing market is still struggling at this point in the year. And they also released advanced retail sales, which gives you an idea of the strength of the consumer, and they are still strong. That number came in unchanged. Today, we get a little bit more information on the housing market in regards to new residential construction, which is huge because to decrease prices and to make housing more affordable, we need a larger supply to also help with a lot of the other things that affect housing prices and housing costs and affordability. So we'll like to see if that number comes in at expectations or above or below expectations later on today. But let's go into earnings. We are still in earnings season, and we are starting off today looking at one of the portfolio stocks that is focused on credit. So private credit specifically, called Eagle Point Credit. Daily time frame. This is one of the dividend players in my stock portfolio. Solid. It pays out about 9. That's the expense ratio. About dividend yield 40.29% on average right now, as far as the calculated average on Webull. But it has been in a heavy downtrend. On a monthly time frame, we're still dipping down, but this is one of the things that comes with dividend stocks. You expect a little bit of volatility and a good portion of sideways motion compared to a accelerated exponential curve to the upside. So you're looking mainly for income, but as far as their earnings, they did beat on their earnings per share at plus 0.23% versus the 0.21 cents, not percent, cents expected. They did miss revenue. They did note in their earnings call yesterday that the default rate has decreased compared to the last few months of last year, which is a good sign that people are paying off their credit, especially businesses, because that's who they offer credit to, those private companies and some public companies that need that funding to sustain their operations and to grow. And I believe they help. No, they just provide credit. They're focused on loans. But they also, with the information release, they also noted that they have began, as far as a company, spreading out their reach as far as what they invest in with the money made through their funding. So instead of just focusing specifically on private credit and providing credit to companies and entities, they are now spreading out beyond that to maintain longevity. Also, they have a new European partnership, which is solid. They did cut their dividend so that they could maintain their company cash flow and company sustainability. So that is something that we are going to have to watch, because if they continue to cut the dividend, this is why we bought into this stock. So that's something to watch. And then their NAV decline, which is huge. So a lot of warning signs right now as far as the private credit markets, which has had a lot of negative sentiment lately because of the deregulation in the public markets by this current administration. So we're going to keep an eye on this stock. This is somewhat similar to what has happened in the past, the major drawdown in 2020 going into the pandemic. So it's not that dramatic, but we're going to definitely keep our eye on it as far as the private credit markets and ECC. Also yesterday, another company that released its earnings that's within our portfolio is RSG. And look at this beautiful chart. This is Republic Services. They are the people who do all the recycling for you. Little red triangle. Yeah, that's them. But they had a solid close. Look at this monthly time frame. It is beautiful. The exponential curve. It might not grow fast, but it's consistent and it's steadily heading in an uptrend. But solid earnings yesterday. They majorly beat on earnings per share, hitting $1.76 per share versus the $1.62 to $1.66 that they expected. They did miss a little bit on revenue, but the thing is they are returning a lot of the portion of their profits to the investors. So that's a solid thing. Missing on revenue is something that we will watch. We do not want that to become a pattern in this company. Other than that, we will be using RSG as a gauge of how construction is, as far as the industrial complex of the U.S. is either booming or not, because they provide recycling services for these construction sites. So when that boom officially comes into a major push, we should see some profits in this specific sector within RSG as far as providing recycling services and disposal services for these construction sites and these industrial sites that may need to put away solid trash. One other thing that was noted on the earnings call yesterday was the fact that they have held solid earnings as far as their earnings reports each quarter. Although the past 3 or 4 years have been tough, they've had declining customers and it's just been a tough macro and regulatory environment. Other major things that they noted in this call was the fact that they are they're heavily incorporating AI, and they see that AI may play a major factor in increasing profits exponentially within the company, just because it's going to help with routing, it's going to help with optimization, and they see about a $3 to $4 million upside when it comes to a lot of the routing that AI may be able to optimize. So that's a good sign. AI is here, and these companies are talking about it like that, like it's going to be a major aspect of profit growth. So we're going to see if that's going to come into fruition over the coming months and the coming quarters of this year. Other than that, we had another energy player released its earnings yesterday. They have their earnings call later this morning, but this is just a sign that we're still in a boom. They had a major beat on earnings. Let's see if we can find that information fairly quickly. Boom. So EQT, and that's their ticker also. They are a natural gas producer. So the information states that the natural gas producer on Tuesday posted a profit of $677 million or $1.08 per share, compared with $418 million. That's $200 million more dollars as far as earnings per share, which is wild. That's a big jump, a big beat. Excuse me. Also, the revenue climbed $2.39 billion, although it was forecast to be $2.13 billion. So major beat. The CEO did talk about the winter storm and that it was negligible to the impact on the company's earnings and everything, and they handled that situation fairly easily. But energy is booming, man. This is why we added it to the portfolio. We got a few major news announcements to run through this lovely Wednesday morning, starting with ASP Isotopes. Now, if you don't know what this is, it still is a penny stock, I believe. One of the penny stocks that I picked up last year. It is mainly focused on isotopes, which is necessary for nuclear production. And you know, right now we're in the energy boom, and we are focused on building out nuclear plants. These isotopes are necessary to build out and provide the nuclear plants with the fuel that they need as far as uranium and getting the correct chemistry right. So solid stair step on a monthly time frame. Daily time frame, we've been in a bit of a downtrend, but yesterday this company announced that their subsidiary Quantum Leap Energy is establishing a global headquarters in Austin, Texas. This is huge. Texas has always been big on energy, whether it be gas or oil. So now they're going to be a major leader in the nuclear landscape, which is huge. But it says today announced its plans for Quantum Leap Energy, a wholly owned subsidiary at ASPI dedicated to advancing innovative technologies and processes across critical segments of the fission and fusion nuclear fuel cycle, to establish QLE's new global corporate headquarters in Austin, Texas, strengthening its presence in Texas and strategically positioning the company to better service United States customer base. This is big. The collaboration contemplated by MOU include a joint venture with QLE and Fermi America. This is actually another company on the stock market that we're going to take a look at, that we may be adding to the portfolio just because of its positioning as far as the nuclear landscape is concerned. But yeah, this is a solid move for America and for this company in the nuclear space. Was there anything else? Let's continue. It says focused on the development of high assay, low enriched uranium, which is needed for nuclear reactors, enrichment research and commercial production facility alongside ASPI's planned commercial facility for the production of stable isotopes and advanced nuclear materials, both to be affiliated with Fermi America's hypergrid campus in Amarillo, Texas. So just big moves by ASPI. That is nice to see. for stock in the portfolio. Let's head over to Affirm. Affirm is continually building out its network, just like Visa and MasterCard. It's going to be a major player in the long run. This is a long-term play. Let's look at the chart very quickly before we get into the news, which should be succinct. Monthly time frame, and it's beginning that lovely stair step. It looks like we'll begin bottoming in the next few months, and then we'll head back to the upside, as has been seen last year in April and around June in 2024. So the pattern repeating. You can see it through the other stocks in the market. But let's look at this very quickly. Affirm announced a new partnership designed to give Lowe's customers more clarity and control when paying for home improvement projects. So you don't have to pay everything outright. They're trying to make things more affordable with a transparent model as far as Affirm is concerned, which is solid. Through this partnership, Affirm will offer Lowe's shoppers transparent payment plans online and in Lowe's mobile app. By choosing Affirm at checkout, Lowe's eligible customers can split purchases into bi-weekly or monthly payments with plans starting at 0% APR. This is the biggest key to Affirm's marketability. They do not add all the hidden fees when it comes to loans or credit. They are upfront about everything that they do. Subject to eligibility. Lowe's shoppers receive a real-time eligibility decision to see their total costs up front, and these costs do not include compounding interest, late fees, or hidden charges. That is the key. Other things in news, FICO has released its December 2025 monthly UK credit report, which is still showing signs that the UK consumers are struggling as far as credit is concerned. And this is something to watch because in our portfolio, we are currently holding EWU, I believe it is. Yes, United Kingdom. This is the ETF for the United Kingdom. Year over year, they have done solid. Last year, this stock hit, or this ETF hit about 34.95%. This year, it's already up 7%, which I believe is beating the S&P 500, the NASDAQ, and the Dow Jones right now. So that's solid, but most global markets are beating the US markets right now. But this is something that we want to watch because it may have some effect on this specific stock in regards to its share price and everything. So basically, let's get to these details. One thing to note is that average active balances rose to its highest level since FICO began recording, up 1.7% on November and 4.8 year over year. So active balances are high. Following seasonal trends, customers missing one payment increased 6.4% month to month. That's not a good sign. When customers miss that first payment, is a sign of stress. It's a sign of non-ability to pay off loans, to pay off debt. The percentage missing three payments increased by 3.7% month on month and 4.9% year on year. This is showing the stress in that UK market. So we don't know if it's going to change. Hopefully it will change over the coming months to give a little bit of stability to the UK market in general. But if this doesn't change, then it may have a negative effect on their market averages. But let's continue. Let's start right here. With more customers having missed three payments, and balances for this group having risen compared to the previous month and previous year, the most financially stressed are facing continued challenges. So the UK market is under stress right now. We'll keep an eye on it in general. But this is a report that FICO releases on a monthly basis, which is solid. I wish they did it for the US, that'd be dope. But they're not as integrated into the US market as they are for the UK. But this is a key report as far as the credit is concerned in that UK market. Other major news, we had Italy getting a boost from the Milan Winter Olympics, which is Milano Cortina 2026 Winter Olympics. So that's solid. Most of this increase was due to U.S. visa holders. So whether people want to recognize it or not, the U.S. consumer, the U.S. in general, the U.S. market is a major reason and a major player when it comes to the sustainability, the surges, and the profitability of other world markets and other world economies. But that's just some fun news. One major news that Caterpillar, this is also a stock in our portfolio that we recently acquired due to an earnings report that I saw on the news, hit the news. But we love this steady exponential curve that we see on Caterpillar in general on a daily time frame. Not too much volatility. This is a safe stock, industrial focus, and it gives us a little bit of a temperature of whether the AI boom and data center build out is still booming or not. So it gives us a nice little gauge. But what they announced today is that they're bolstering mining technology solutions with an acquisition of RPM Global, which they actually announced that they were acquiring in October of last year. But this is basically a software company that helps with mining. But it says by combining RPM Global software capabilities with Caterpillar's proven equipment and technology solutions, software is still a major portion of the build out. Okay, guys, we will unlock new opportunities to help customers improve mine site performance while advancing the future of mining technology in a way that is practical, scalable, and grounded in their needs. So software is still key. AI is a major player, but this is a big move. I believe this is a company listed on the Australian stock market, but this is a big move by Caterpillar, a solid move, and we like to see news like this when it comes to companies within the portfolio. Last but not least, we're returning back to ASPI, but mainly we're going to be looking at Fermi. This is the company that they are partnering with in Texas to build out the nuclear facilities and the isotope factories that they are currently constructing. Now, this stock was listed on the stock market just last year. It has been in a heavy downtrend. And one thing to note, there's a lot of negative news when it comes to this stock right now, as far as lawsuits are concerned. So that's something that I'm going to keep my eye on very diligently. But I still may add it to the portfolio because check this out. So this is their site, Fermi America. Always, it's always good to do your research, your due diligence whenever you're thinking about investing in a company, even if it's a penny stock or a stock that has been in the market for a increased amount of time. But let's head over to the newsroom, right? Look at some of these articles that have been pushed out just this year. You see a partnership with Hyundai. That is a big sign to me that's huge. Hyundai is one of the major car producers in the world and in South Korea, and is a leader in a lot of technological areas. So that was like, okay, Hyundai, like to see it. Nuclear is another thing that I like to see, especially in this time frame. So this is piquing my interest. And then we go down and we see that there are a few other major articles that kind of give you an idea that, wait a minute, this may be a major move. We have Fermi America announces arrival of 6 Siemens Energy. Siemens is one of the major generator producer companies in the world. I think it is the major one. So getting a turbine or a piece of equipment from this company, and it's coming to Houston, it's coming to the Americas, that's big news for me. I'm looking at this like, wait a minute, Hyundai, Siemens, this may be a company that I'm going to take a small position in. It's a bet. There are gambles when you invest in the stock market, and sometimes you win and lose, but starting off small is the key. So I'll probably open a small position in Fermi just to keep an eye on the news and everything, because these connections and this connection to another stock that's in my portfolio right now, this partnership may lead to a big push to the upside in general, as far as this company is concerned, but we'll keep an eye on it. But let's look at the profile very quickly. It says Fermi is an advanced energy and hyperscale development company purpose-built for the artificial intelligence era. We love to see it. The company is engaged in the development of electric grids and deliver highly redundant power at a gigawatt scale required to create artificial intelligence. This is dope. And it's situated and stationed in Amarillo, Texas. So it's based in America. We love to see it. A lot of good news in the market today. The pre-market is still pushing along with crypto. So we'll see if we can somewhat recover and keep up this bounce in the stock market on today. But other than that, that's all that I have for you on this lovely Wednesday morning. It's hump day already, so that's nice to hear. Don't forget to stock the future. In the next 1 to 5 years, we are looking to fire our bosses. I don't have one, but I want you to be able to have the optionality to fire your boss. We want to gain control of our finances. We want to multiply and gain market share in the stock market so that we can do what we want when we want with the money that's necessary to fund our dreams, fund our goals, and fund the lifestyle that we want to live. But yeah, stock the future, guys. I believe that is all, and I will talk with you guys tomorrow morning. Full day. Peace.